Let's discuss the top 6 Fidelity index funds that offer various investment options ranging from international exposure to top-performing funds in the market. Before we go any further into this video, welcome to Cash Money Ideas. Here, we will show you the most up-to-date making money online ideas, tips, and tricks. Please subscribe to the channel, hit the like button, and press the notification bell so that you'll be notified whenever I upload a new video. And lastly, don't forget to leave a comment below. We would love to hear your thoughts. Now let's get back to the video. Starting at number 6, we have the Fidelity Total International Index Fund. This fund focuses on investing in stocks included in the MSCI All Country World Index. This index aims to mirror the total return of foreign developed and emerging markets. In simple terms, it exclusively targets companies outside of the United States. This can be advantageous for those looking to diversify their portfolio globally. Presently, the fund holds about 4,825 stocks with key investments in Nestlé, Alibaba, Samsung, and Toyota. Since its inception in 2016, it has delivered an average annual return of approximately 8.89%. Please note that while 8.89% is respectable, it's essential to understand that this fund is not designed for chasing the highest returns in the market. Its standout feature is its low expense ratio of 0.06%, which translates to a mere $6 per year on a $10,000 investment. However, before you rush to invest in this fund, keep in mind that it primarily deals with foreign markets, making it susceptible to various external factors from economic shifts to political developments. This level of volatility is more pronounced in emerging markets where sustainability tends to be lower. Nevertheless, investing in international stocks can be a prudent move, particularly for long-term investors seeking to expand their portfolio's reach. Moving on to number 5, we have the Fidelity Zero Total Market Index Fund, or FZROX. This fund invests in stocks included in the Fidelity US Total Investable Market Index, which closely tracks the performance of the US stock market. What sets FZROX apart is its groundbreaking feature. It boasts a 0% expense ratio, meaning investors pay no annual fees on their investments. This move by Fidelity appears to be a strategic way to attract new investors. Since its launch in 2018, it has delivered an average annual return of 18.01%. An investment of $10,000 in 2018 would have grown to a little over $17,600 today. In terms of holdings, FZROX currently has approximately 2,662 stocks in its portfolio, with major investments in giants like Apple, Microsoft, Amazon, and other industry leaders. However, there's a catch. Fidelity's zero-branded index funds, including FZROX, cannot be transferred to other brokers without selling your existing holdings. This sale may trigger capital gains taxes if you've made a profit. So it's important to be aware of this before making a decision. At number 4, we find the Fidelity Zero Large Cap Index Fund. This fund focuses on companies included in the Fidelity US Large Cap Index, which aims to replicate the total return of large cap US companies. Large cap companies typically have market capitalizations exceeding $10 million and are known for providing quality goods and services, leading to consistent growth. Among the 516 stocks held by this fund, you'll recognize several household names. Since its inception in 2018, it has posted an impressive average annual return of 18.56%. An investment of $10,000 in 2018 would now be worth over $17,500. Like FZROX, this fund is relatively new, making it challenging to predict its future performance. Also, it focuses solely on large-cap stocks, which may not provide the diversification needed for a well-rounded portfolio. In terms of cost, it's part of Fidelity's zero-cost fund family with an expense ratio of 0%, meaning investors pay no annual fees on their investments. However, remember that having a diverse portfolio often requires exposure to different market caps and asset classes for effective wealth building. Before we continue, I'll give you some time to subscribe to the channel and give it a big thumbs up. If you loved the video so far and found the content interesting and informative, please leave a comment below. We'd love to hear what you have to say. Now let's get back to the video. Taking the third spot is the Fidelity Nasdaq Composite Index Fund. This fund invests in stocks featured in the Nasdaq Composite Index, which reflects the total return of a wide range of US stocks on the Nasdaq exchange. The Nasdaq 100 has notably outperformed the S&P 500, primarily due to its top holdings such as Apple, Microsoft, Amazon, and Google, which collectively constitute almost 50% of the index. While this focus may limit diversification, it's hard to dispute its performance. Over the past 10 years, the fund has delivered an average annual return of 20.76%. An initial $10,000 investment a decade ago would now be worth nearly $66,000. However, this performance comes with a higher expense ratio of 0.29%, equivalent to $20 annually on a $10,000 investment. If you seek a lower expense ratio while gaining Nasdaq exposure, you might consider the Invesco Nasdaq 100 ETF or QQQM, which boasts a 0.15% expense ratio, nearly half of that of the Fidelity Index Fund. At number 2, we have the Fidelity Total Market Index Fund. This fund invests in stocks included in the Dow Jones U.S. Total Stock Market Index, aiming to mirror the total return of a broad range of U.S. stocks. This fund closely resembles FZROX, except for a crucial distinction. It can be transferred to any broker, unlike FZROX. The fund presently holds 3,875 stocks, with top investments in industry giants like Apple, Microsoft, and Amazon. Over the past decade, it has delivered an average annual return of 16.25%, translating to a little over $45,000 from a $10,000 investment in 2013. Moreover, its expense ratio is exceptionally low at 0.015%, requiring just $1.50 per year on a $10,000 investment. This fund is an excellent addition to your portfolio, but it may not serve as the primary investment given its sole focus on large-cap stocks. To create a well-diversified portfolio, you may want to combine it with another index fund, such as FZROX, to cover various market caps and assets effectively. Finally, securing the top position is the Fidelity 500 Index Fund. This fund invests in stocks within the S&P 500 index, representing the 500 largest U.S. companies. Although not entirely fee-free, it comes close with an ultra-low expense ratio of 0.015%, equivalent to the cost of a small order of fries at McDonald's on a $10,000 investment. Over the past decade, it has posted an average annual return of approximately 16.54%, with the $10,000 investment growing to over $46,000 today. However, this fund has a limitation. It doesn't offer exposure to small-cap stocks, which can offer substantial growth opportunities. Combining it with a broader market fund, such as FZROX or Fidelity Total Market Index Fund, can provide comprehensive exposure to various areas of the stock market. In conclusion, these Fidelity Index Funds offer diverse options for investors with varying objectives. When selecting the right fund for your portfolio, consider your risk tolerance, investment goals, and desired level of diversification. Diversifying across multiple funds can be a smart strategy for building a robust, well-balanced investment portfolio. If you love this Make Money Online video and found the content interesting and informative, please like and leave a comment below. We'd love to hear what you have to say, and press the notification bell so that you'll be notified whenever I upload a new video. And don't forget to subscribe to Cash Money Ideas. See you in the next video!